Hey guys, thanks for having me. I want this to be interactive. So really, I want to just share some of my story, how I got into what the heck I'm doing, and why I do this, and all of that. So I am now an investor myself. I just bought a commercial real estate building for my office, and doing a lot more of that, and just have a big plan and just love the things that I help do is really helpful within real estate investing and in this whole crazy financial world that we find all of us find ourselves in. So a little bit about me is I am a what do you call those? I've had multiple businesses. What's that when you have a bunch of them? Yeah, serial entrepreneur, whatever the heck that means. I'm a serial entrepreneur.
Exactly how you described
it. Yeah, lots of businesses. Most of them, some of them, as I did, I was like, oh man, this is not a very healthy business. I am not healthy as a business owner. And my first business was a coffee shop. We had a big desire to make an impact. And we thought that running a coffee shop, we'd make a lot of money. And, that would be amazing. A couple years into it, we realized this is really hard. We were last to get paid. The overhead was insane. We were not the owners of the building. We were the renters, and that had problems associated with it, meaning we did not have control of rents, or our lease was a year-to-year lease, and that was a problem, right? And so through that, we still had this passion to change the world, make a difference. And we came across this concept called infinite banking. Let me know, have you guys ever heard of that system? Have you heard negatives or positives about it?
Well, I've heard both. I have a negative connotation about it.
Yeah, I would share that. I've heard too much about it, maybe.
Gotcha.
Go ahead. Sorry.
So here's the thing. With this, I knew that me as a business owner, I was my greatest asset, right? My biggest risk was also me. And if I was investing, I was a business owner, right? So there's no 401k match, right? There's none of that. I am not the match for myself, like in general. It just didn't make sense as a small business owner. So I needed to have.
I'm so sorry. I have to take a step back. Why, as a sole business owner, why is a 401k match not working? Oh, because you have employees? Is that why?
Because I would be matching myself, right? I needed to, and I was very much on the edge of burnout, right? On the edge of brokenness ourselves, and in this coffee shop, right? We needed to have some stability in place. And putting it into the market seemed like it was divesting from myself. I was divesting from our business or future. And so we watched this documentary called Banking with Life, and started putting small amounts of money into our policies, right? Life insurance policies. And through that, we were able to access the capital as we were saving for things that happened. I had a flood in my business that, unfortunately, this flood, things don't just, it's not just up and to the right. As much as people think it's going to be up and to the right, accidents and things happen. Well, I was able to access my cash value on my policy to overcome that obstacle, right? Which was hugely powerful because I had access to the capital anyway. Then after that flood, literally the roof was off and it rained, freak accident, and all of this stuff happened. Well, lo and behold, my wife was 2 months pregnant, did not know that at the time. And we found out we were going to have a baby, right? All the while, I had met with an attorney at one point because we wanted to grow the business. And unfortunately, I don't know about you guys, I didn't come from a rich uncle that gave me a lot of money to get started. I'm a poor person that started, when you start a brick and mortar business, you don't just like go with, a lot of money. And I don't know about you guys, you can get loans for student education, but as a business owner, it's harder to get loans, right? Or any of that stuff. Very hard. I learned it. So we learned about this whole thing called profit first. My lawyer had asked me at the time, we had paid off all of our debt. We had helped a lot of people in that industry or with the coffee shop. But he asked us, how much are you paying yourself? And I was like, well, let's not talk about that. That's not important. And I learned about this system called profit first, right? And making sure I reverse engineer making sure I'm paying myself, right? As a business owner, as a self-employed person, making sure taxes are in the right place. You'd be surprised how many business owners forget that the money that comes through their hands, that they actually owe taxes on it often. And so with all that said, Profit First was a big deal. If you haven't heard of Profit First, I recommend it. Has anybody heard of that system, Profit First? And what are your thoughts on that?
I don't want to disrupt your flow, so I'm going to reserve my opinion for now.
Gotcha. Well, and Profit First for me was very eye-opening. And there's a book called Profit First for Real Estate Investors. There's a lot of people, and I'm a business owner. Most businesses fail, right? Most, and it's not because of ideas. It's because of access to cash or capital. They don't understand their numbers, right? And so that was something that really resonated with me. All the while, I then had this flood, had a baby, right? And I was planning to grow into this coffee shop for a long time. And I learned that this concept of infinite banking and Profit First had made a big difference for us. Luckily, because of access to capital, I was able to sell my business, not close my business. There's a big difference there. Majority of businesses close. 85% of businesses don't even make it very far, right? So that was a thing of saying, okay, I had the passion, I had the tenacity, we were working our ass off, but it doesn't always work out just because you have great ideas. You need to actually have cash flow. You need to actually have your numbers, and you need to understand your numbers. Again, I've talked to business owners all the time. They don't actually look at the deals and actually don't know the numbers, right? That happens way too much. And even here, if you don't like infinite banking, or you do like infinite banking or whatever, it doesn't matter. What matters is, okay, have you actually run the numbers for yourself? And does it make sense for you? Because honestly, anything could happen. And why I like the infinite banking strategy is prepare for the worst, hope for the best, prepare for the worst. We don't know when things are going to go badly, right? Or when they're going to go good, right? And so I wanted to be able to make sure if something happened to me in the coffee shop, that my wife was got to be made whole, and not just saying, oh yeah, now you have a huge debt and this, right? So now fast forward 7 years, I actually used my cash value on my policy a couple times, used it for an emergency in the building or in that business, right? Able to sell it. I used it to do a 20% down on my property, right? 20% down. I did 20% down on purpose because then I didn't have PMI insurance and all that fun stuff. And then I paid it back. And then I just recently bought a commercial real estate building for my office that I'm the owner of, but my business is the renter. I like it that way because I don't have to deal with, crazy renters because I am the crazy renter and I'm going to protect it. But my business is paying me rent. And I know, as you guys were talking about interest rates going up, what do we do about it? I've done the math. I also took a loan from the bank, but I also know what worked, and I was able to have better terms because of having access to capital. And now I've done that, and I'm going into more note investing, private money lending, those kind of things, because again, I still have that capital. I might just use my policy as a line of credit, kind of the way I think about infinite banking. And if I say too much, or if it's confusing, let me know. We understand the Heloc strategy, right? Right. You access your house for a line of credit. Usually people use it to not for anything good except to buy a deck or something. But we access that line of credit and we go buy something with it, right? The downside is if you're not employed, you can't get that money usually, or if you're self-employed as a business owner, it's a get a little tricky sometimes. Whereas the infinite banking strategy, the difference I think is instead of the line of credit, the house is your thing, you're the house, and you're able to access. Yeah, you're able to access your line of credit, and the more you put in, that house will always get better and grow. So that's something that I think about a lot, is saying, I want to protect my greatest asset. I want to make sure that it is privately protected. You know, we're in a protection base here in this group. And I want to have access without penalties or without the government saying this or that. Also, this is something I think about a lot as far as putting into some of these plans in the government and tax deferred. So let me just ask you guys this question, and you let me know. Would you ever get into business with somebody where they make the terms of service in the future? They'll tell you the rules later. Would you ever sign that deal?
That's how lucrative the deal is.
No, you don't know the terms of service. They could tell you later what the rules are.
I assume you're referring to the government. In what capacity are you referring to the government?
I'm just asking, would you ever sign that deal?
Again, and I don't mean to be pushed back, but hypotheticals are only as good as what you back it up with. Obviously, the answer is no. If you're saying it's the government, then I have to go back and look at what the history is and what particular aspect. Yeah. I mean, I'm going to assume, and I hate doing this because what do they say? Assume makes an ass out of me and you. But I assume you're referring to like an IRA or a 401k that the government might choose to
taxes
later on.
I just think about
taxes in general.
Okay. Yeah. Okay. Taxes in general. We defer taxes and we put into these things. And on top of that, we don't know what the return will be, right? Especially in a volatile market. There's a lot of math that is just wrong out there that we really want to think about. If we would never get into business with somebody where they make the terms of service in the future, why do we do that with our retirement assets all the time? Go ahead.
First of all, I just want to say how thankful I am that you're showing us, your progression and, what works for you and what works for any of us may work for others and it may not. And there's nothing I like more than hearing how other people have done things. And I especially like it when I hear that they've done it different, because I feel that we all benefit by being consummate students our whole life. And I'm going to challenge you on kind of some of the assumptions that you're making. And it's not because I don't like you. Actually, I like your presentation style and I like the way you're doing things, but I can only learn by, asking questions. But can you tell me what, with infinite banking, what you feel you gain from it that you can't gain by doing it yourself? And let me just give an example before that. The main advantage that I see it is, frankly, if you lack discipline and you want a way to put money away into something, kind of like paying a mortgage off over time, you'll have more and more of your principal disappear. But I find if you're a very disciplined person, instead of making those payments to a policy, you can pay them into a brokerage account. and you can borrow against it. If you do the right brokerage account, you can do it at a very, very good rate. If you're really not into the market, you can invest in very broad-based ETFs that are very tax efficient and very much mimic the markets, which is exactly what the people that you're giving the money to, the insurance companies, are doing. You can mimic really what they're investing in. And for me, there's very little you can control at the market. There is one thing you can control if you pay attention, and that's how much you pay in fees. And the thing where it breaks down for me the most with independent banking is the amount of fees that you have to pay. And I don't know if you've done the analysis. I assume that you have. But yep. I can't get past the fact that so much when you put the money in, when you pull it out, when you put it back, the fees that rack up compared to really doing it on your own with portfolio margin or margin accounts, or borrowing against your stocks, paying them back, and a few other methods. I'm really having trouble seeing the benefit, other than one thing, which I'll discuss later. But
well, what are the fees on whole life insurance? Tell me.
That's going to differ completely depending on what you see, but some of them I've seen it's 7% right off the bat. That you put into it. So, I mean, any fees. If it's 2%, if it's 3%, if it's 1.5%, it's more than what I'm paying. I have trouble with that. I also have trouble that you don't have any say in how that money is being invested. And if you feel even remotely comfortable about investing that money, there's other avenues in which you can put your, money into. Whereas an entrepreneur, you not only have access to that money, but you have access to how that can be invested. So that's kind of where it breaks down for me. But I have heard from you, I've heard from others that swear by it and love it. So I'm curious how you get over that hump of the amount of fees.
Well, let me ask you this: how many people actually know where their money's invested when it's in the market, and how many people actually, if they have an employer sponsored plan, actually have certain choices? Right.
I think that's an excellent question. I'm being more selfish and saying what's right for me, and really what I recommend to other people, and that can be totally contrary to each other. I very often will tell people that it's okay if their kids don't go to college because college isn't for everybody. But there's just no. I'm a complete hypocrite because there's no way my kids are not going to go. So it's the same advice, is that you're right. Maybe infant banking is right for some people. But I would argue you can invest that same money in interactive brokers, pay very, very little fees, and have ETFs, and you can borrow against it at a much, much lower rate, and basically do what the rich do. Because if you're paying yourself first, which is another thing I have a trouble with, is that you now have income that you've got to pay payroll taxes and taxes on. What do the rich do when they need money? Does Elon Musk sell a stock? No, he borrows against it. That's what the rich do. You borrow against your portfolio.
Do you think Elon Musk has whole life insurance?
I know that a lot of very uber wealthy people do.
Why do you think they have it?
Well, because because of estate planning, and they want it to pass on to their heirs without being taxed. And when you have a cap around about 24 million now, anything beyond that is going to be taxed at 40 to 50%. So that's why a lot of them do it. Yeah.
So thinking about, it's all one wallet. In my opinion, it's all one wallet. And I think JD or JL said, I do both. I do both. I'm not saying either or. I don't even compare this to a investment thing, right? Investment vehicle. This is not an investment vehicle. And if you've been told it's an investment vehicle, it's a savings component. It is where you can put your money, cash available, access and liquidity into something that you can access and leverage for use in the future, right? It's a savings component. It is not an investment. And if somebody has told you it's an investment, they're wrong. It is not an investment. However, when you have your money in savings, do you get taxed on it?
When you have your money in only if you sell.
in your savings account, do you get taxed? Yes.
Inflation. God, I wouldn't talk about putting money in a savings account. And even if you did get taxed on your savings account, what's your interest rate on a savings account? Even now, less than 1%. So yeah, tax me away on that less than 1%. Because
and this is
you need $100. Here's $100.
This savings account is a poke in the eye every month.
Yeah. And this sounds like red versus blue. This is why I don't get into these kind of things and why I hate politics in general. All I know is, yes, I think it's a both and, not an either or. And the reason we're in a crazy, insane world right now is because of greed and because of a lot of things that I just want to make sure I'm building enough and helping my family make sure they are in a better position. Right. Because also I have, let me tell you this. I have a mother-in-law that I'm a caretaker of, and they did not take care of that stuff. And unfortunately, not all of us have family members like me that are taken care of. The reality is with life insurance, and this is the main point, is that we will all die at some point. Can I give it to my heirs tax-free, and can I leverage and use it while I'm still alive without the 59.5 rule? All of that stuff, it doesn't matter. I don't want to get in an argument. It's a both and. I love real estate. Whether you do it with a Roth or any of that stuff, I don't care. Have the conversation and know your numbers, but also realize there's risks in just going all in on one side and not having long-term care or those kind of pieces in place, right? And I want to be able to figure out how can I have my cake and eat it too, at least in some regard. Maybe I'm going slower than others. That's okay. But it's
work for you. That's a huge plus.
Exactly.
That's a huge plus.
And the reality is the market. I see a lot of people that I'm dealing with their retirements and they're screwed. And I'm like, I don't want to be in that position when I'm at 65. Right? We all didn't start with the $200,000 or $1 million loan from our parents, right? How do we best position ourselves to where we give our family and a leg up, right? That's the main thing. Alex Brendan, has a question.
Yeah, Brendan. So to put some context to this, and welcome, by the way, and I've heard about infinite banking and the rest of it, right? But to put some context relative to your experience from a dire business situation with a coffee shop and all the challenges associated with it, you're able to learn something, apply it, that transition. Now, relative to the insurance piece of it, give us some context. What was the amount? What was the expense? What was the savings, if you will, that needs to be set aside? Because at that point in time, I'm sure it wasn't easy for you personally or your partners or your family, right, to make that decision. Yeah. But you did. And you said that 7 years later, so there's a timeline. But the point is you did something to get you out of that situation. So you reverse that path of failure to something successful. So give us some context.
That's great. Right. And I do think savings is different than investing, right? What we realized is our biggest risk was us in the business. And we were not able to make sure that we were taking care of future us, right? So we needed to reverse engineer, and we put in $400 a month into a small policy that we felt we had a little more control over. We could have access when we need it. And I was going to protect my wife if something happened to me, because I did end up going in the hospital for anxiety and blood pressure, right? Because of the coffee shop, right? So I could have died, right? So at least it was something. And I had access to it, right? And I was doing $400 a month, right? So in the beginning, put it $400 a month, my access to capital back into the policy, $250, right? In the first month, right? But it kept growing. And I had things that we had a line of credit that we could use. And again, always do the math. I knew that the cost of accessing the cash value was 5% simple interest. Or I could have used a credit card and overcome that obstacle at 22% interest. kind of did the math to see which makes sense, right? So
That 5%
at that point,
paid back to you, like you borrow the money and you pay it back. You know what I mean?
it goes back to the policy, right? Into
Yeah.
and this is where people always are confused or they'll argue. So the policy, as I'm putting in, it's an overfunded policy. I get dividends into the policy as if basically it's a return of premium and it keeps it under the taxable limit, right? So the insurance companies have a business model. So 5% simple. Either way, I don't care. 5% is less than 22%. I don't care who get the money. It's cheaper, right? So
I'm sorry, Brandon. Would you tell me about what is the 22% again? That's if you wanted to pull it out completely.
like a credit card. I see people all the time. They don't have an emergency fund and they've gotten out of debt, but then something happens. Guess what happens? A bank gives them here's your emergency fund. I'll give it to you at this rate, right? It's all about the interest rates and thinking through it. Why is the Fed increasing their rates, right? We have to ask those questions, right? And all of that's going to increase. So it's access to capital at a lower rate.
Yeah, Brandon. Yep. So let's go back to the $400 that discipline, the decision you have to make come from you personally or the business. You had to find that money. You set up a policy. What was the insurance part of that policy? Because that's a big plus, right? Because you're buying a whole life insurance. What was the value of the policy for the insurance part of it?
Oh, how high was the
how much did that buy?
How
much insurance did that buy? Well, yeah.
Oh, probably in the beginning. I think my death benefit is about I don't know, 500,000 or something like that.
Okay, so you have 500,000 insurance. You're making 400,000 investment, and you rode it for 7 years, right?
Yeah, I still pay into that premium into the policy because I'm now 7 years. No, I've been doing that since 2013. So
understood. That the reference that you had mentioned earlier, that 7 years later you were able to then leverage that, borrow against it, and then you're able to have access to liquidity, if you will, through the policy. Yeah. So
I think of myself. Yeah, I think of myself as both the borrower and the lender at the same time. I'm wearing two different hats, right?
Copy noted. So $400-500, you made an investment. So 5 to 7 years later, right? So this is the time span that you were able to use it and apply it towards, reversing engineering your business to get on the upside.
The cash value.
Yeah, and what I'm thinking is I'm thinking long range more than anything. I'm not just thinking about short, quick wins, but I'm thinking about future me. Taxes, all of that stuff that's going to happen when I'm 82, not when I'm 25, right? And the way I kind of think about it is it's the what I call 10-10-10 savings rule. 10% should, and this is richest man in Babylon. 10% of all you earn is for you to keep. It just happens to go into my life insurance policy. I have a bigger policy. That is, I put my MEC limit, which is a technical term for my taxable ceiling, is $56,000, right? $56,000 is my ceiling on this policy, a separate policy than that small one that I started. And I have to save for taxes every year, right? Hopefully. I just happen to put it through my policy first to create a line of credit.
This is all after tax dollars, right? I mean, you don't get any tax benefit for putting it in.
Correct? Not for putting it in. I mean, I've already paid I'm going to pay the tax now versus pay the tax in the future.
Right. Kind of like a Roth in a way.
Yep. It's what they call it is a rich man's Roth. I don't have to worry about the 7,000 or whatever. Rich man's Roth. So again,
Brandon, what did that 400, 500 investment or savings rather, until you were able to use it, what was the amount of the money that you're able to access liquidity wise? What did that translate to you in your case?
Yes. Yeah. So let's say I put in $400 month one, I'll have $250 cash value, at least for my age, month one, right? Day one of the policy, right? So a lot of people say, well, you don't get cash. You don't have it until you're in year 3. Like, well, that's totally not true because I did. Right. And so we want to think about, it's all about again, saving for the future, access on my terms, and I'm thinking long range, right? So it's not an either or, it's a both and, not Democrat, Republican, or any of that. This is the savings component that I'm using to then do things that I'm investing in other areas in my business and real estate. It's a both and.
Brandon, of that $400, how much of that is going to, in a sense, well, the life insurance company as a fee?
It depends. I mean, think about it. And you want to talk about rate of return all day long, right? Rate of return, I put in $400, and here's the problem that we don't realize. They're in a business model. However, if I died tomorrow, my wife gets a huge rate of return, right? All right, and it's insurance.
Right.
No, but here, we want to chase rate of return all day long. Numbers don't lie.
I wasn't going toward rate of return. I was going toward kind of what I mentioned earlier about the one thing you control is fees. And if you're putting in 400, but you're only getting 93% of that, because 7 is going to, the business, their business model. That's something that you should know, because over time, that 7% rate of return to them is quite substantially a negative toward you. Well, go ahead.
Let me ask you this.
Sure.
Most people are business owners, and this is who I operate with most of the time. They operate in a negative for 3 to 5 years, right? It costs money to start a business. Often. Am I right?
Yeah, sure.
Yeah. How much does it cost to start a business?
Oh God, that depends on the business.
And how much do you make back? Why do you get into business? Why do you get into business?
Earn
the business to make money, of course.
To make money, right?
Well, it's one of the reasons.
However, here's the thing. You get into business to make money, but the first 3 to 4 years in most businesses are a negative, right? Cost money, right? There's a cost to starting a business. Am I right?
We're awfully generalizing here. I mean, most people will be out of business by year 3. I mean, if we're really being honest, you're very.
So what I love about this, it's a business model. So I could tell you by an illustration, yes, there's a cost of insurance, right? But by year 4, if it's designed properly, not all insurance is the same. Not all life insurance, infinite banking is very different. That's why you find the right person. By year 4, I will be able to tell you that I know that the cost is negligible. It's going to go away. By year 7, I know it's profitable, and I can tell you exactly with the numbers what it's going to be and how profitable it will be. No question. I can tell you in the illustration that it's a profitable business for you.
Guaranteed.
Now, guaranteed? Is there a business? Is there a cost of doing it? Absolutely. Now, if you died in the first 3 years, hey, they run a loss. That's why they create it the way they do. They don't want you to die, right? So we want to think like a business model.
Yeah. Before we end this, I want to go back to the 400 savings, right? At some point you deploy it. What was the amount of money you were able to draw from that plan to apply towards your business to reverse engineer, if you will, your situation? What was the amount of capital that you were able to access?
It keeps growing as I put in, right? I'm still funding into my policy, right?
Copy and noted. But how much did you pull out to apply to your business when you did it, when you were in a position to do it? I understand the concept. How much? Talking 50,000.
I started in year 1. So remember, I started a coffee shop. When I started the coffee shop, unfortunately, you start 0% interest, right? For credit card, and then they increase it up, right? Well, what I did was I used my cash value to do what they call the snowbank method or snowball method.
Snowball.
I just used my cash value and then I paid it back. So then I was generating wealth. It's a wealth accumulator idea. So I'm using that to overcome the debt, because most people start business in a negative. It's all about doing, again, don't do what the banks tell you to do what the banks do, right? Using the system to think about access to capital, assets, liabilities.
Okay.
80 cents. I don't know what that means. 20% to premium, 80% to policy. Oh yeah, that might be like a split on a policy, right? As I think what they're saying. As a good, efficient policy, it depends on how we design it. I think a lot about the design or what the client needs. And sometimes you get dividends on the base premium. And again, I'm not building a policy that's high base, all death benefit. I want to shrink it and have as much cash value within reason. So those are things I think about. And again, I did not realize when I got into this business, I had no idea that Dave Ramsey has the rule and that the market was like it is. All I knew was I was a small business owner trying to make a difference in the world through an ethical coffee shop, learned about this whole thing, and it changed our life, changed our trajectory. And I see a lot of people, blood in the street kind of idea. And I'm like, how do I help people? Oh, this helped me. I'm going to help others. And I'm in this industry, not real. I mean, again, when I got in, I didn't realize. I just was like, oh, this is helpful. Why don't more people know about it? And that was kind of where I got into it, right?
So Brandon,
if I knew that there was better ways to make more money, maybe I'd do something else. But I
haven't talked to you about that. I will say there's a couple of benefits. I mean, the death benefit is huge. I mean, you could probably do it with a term life policy on the side, until your wealth is to a certain point, in my opinion. But the one big benefit that you haven't brought up is the shield from liability, that insurance companies offer you, that your money's a lot more protected than a lot of other vehicles. So I will tip my hat off to that portion of it.
Yeah.
Hey, Brendan, before
cool.
we
What
end
other questions
today, if you could make sure you post your contact information for some of us. I'd like to be able to connect with you, have some additional conversation. I mean, I understand the concept, I think, and the idea behind, a forced savings situation, but in this case, it stands to benefit you and your business at some point in time, because there is cash flow that goes through the business. The question is, do you have the discipline to find that and to be able to do what you've done? And that was precisely the point I wanted to focus on as a part of a strategy in terms of how you manage yourself and your business, right? And to that point, and then the amount of money that we're talking about in your case, $400, that's not too much. I think for most of us here, for all of us here, I should say, be able to find that money either in the personal or on the business side. But the doing it is the hard part, right? And of course, you need to know more. And the knowing part of it is someone like yourself who's done it, right? And you can attest to it for what that's worth.
And the main thing I want people to realize, it's all one wallet, right? All of it is one wallet. We think that everything is going to go up and to the right. As anything, this year is teaching us that's not the case. How do we best mitigate that? And we all think we're going to live forever, right? Until something happens, right? Or the downside is, what happens if you don't die? And that's one of the powers of the policy, is having access to long-term care and those kind of things. I didn't talk about that at all.
And you clearly have a lot of discipline, because I could never run a coffee shop. I would drink all the inventory.
That's why I ended up in the hospital, because of having bad staffing issues and over drinking caffeine.
Did you ever get to work, or were you able to pull yourself away from that and go into other businesses? or do you just kind of keep that?
I mean, I sold that business when we had our baby. And again, using profit first, I realized, hey, this is not, as much as I want to be a helping people, I needed to make sure that I'm also taking care of myself. Because again, there's a lot of people who have great ideas, but they're not taking care of themselves. They keep reinvesting everything into the business and saying it's going to get better when, right? And I think that that's a thing that we want to make sure, as someone said, apply my oxygen mask first. That's why I love the profit first system, because I was not. And the reason we sold is because honestly, I could have a baby I could have me behind the bar eating ramen all day long, right? However, that's not good for a child, right? It's actually illegal to have a baby behind the bar. And so I needed to make some changes.
Quick question, Brendan. You might know that a lot of pension funds are getting into trouble because they just didn't have a good way of investing. So which life insurance company do you choose, and how do you know they are making sound investment so this company doesn't go bust in the near future?
Yeah. So how many insurance companies do you know that have gone bust?
I have no idea. Maybe they go bust. I don't know.
Majority of them, there's a lot more regulations in place to make sure. And then I don't just pick one company. I use companies that have been around for over 100 years. They've done this. This is not their first rodeo going through a pandemic. And think about this. They've gone through a pandemic and a financial crisis, and none of them are hurting, right? If anything, a pandemic should have shaken a few things, right? They have to have liquidity on there. So, and they're a good business model. I mean, like, think about it. They don't just buy. They're long-term investors, longer than us. Yeah, mutual company.
Thank you.
Again, you want to work with a great person that picks the right policies, mutually owned, non-direct recognition, builds a policy designed for efficiency that you want, your goals. It's not just State Farm.
It's a mutual company.
Mm-hmm.
As a policyholder, you become an owner.
Mm-hmm. Exactly.
Yep.
Thank you, Brendan.
Thanks,
Awesome.
Brendan.
Reach out. My number's in the chat, and you can reach me at wealthwisdomfp.com if you want to learn more. We have a YouTube channel, podcast. Go subscribe. It's more than just money, is something we thought about with our wealth.